focus. So let's start with the first corporate that we have for you on our show, Star Health. Joining us from the sidelines of the Motilal Oswal 20th Global Investor Conference, Nilesh Kambli, the CFO of the company, joins in. Thanks a lot, Nilesh, for joining in. Always a pleasure speaking with you. You know, there was a larger 4-year target, 2028 milestones, which Star Health had set itself for. What would those numbers have been on gross written premium, combined ratio, market share? If you could give us some more details on the target that you've set for yourself.
So to begin with, on the gross written premium, we are talking about doubling of the premium from 15,000 crore to 30,000 crores. What it means is it means a growth rate of 18 to 20% over the next 4 years. When it comes to profit, we are talking about tripling our profit from the current 850 crores to around 2,500 crores. This will entail a combined ratio in the range of 95-96%. And in terms of market share, currently we are at 33% market share in the retail health business. With the kind of growth that we are talking about, we'll be at around 35% market share for retail health.
Okay, fair enough. Just to, become a little more granular, you took around 17 years to reach that 15,000 crore in gross written premium. And now you're saying you'll add another 15,000 crores just in the next 4 years. So how much do you expect your gross written premium to grow this year and subsequently next 3 years, say individually?
So to start with, where this growth will come from, what we're talking about is 4 channels, the ABCD of our growth, the agency, banca, corporate and digital. We will be firing on all the cylinders. When it comes to agency, we are adding almost 80,000 to 1 lakh agents every year. And that's like a staple food for us. It will steadily grow in that range of 15 to 16%. When it comes to banca, we have more than 55 partners, and as we speak, we are talking to more partners. That is a business which is growing in excess of 25-30% for us, and that will continue to grow. We have invested a lot in terms of manpower for this channel. Corporate channel, again, we are focusing more on SME and MSME businesses. We have again created a team for corporate business. We believe this should grow much faster than our overall growth rate. We believe in the next 4 years, this should be in the range of 15% of our overall business. And that again is a big channel of growth for us. When it comes to digital, we have increased our capacity when it comes to our telesales unit. We are spending a lot on our web sales and telesales put together. This channel is again growing very well for us. We have invested a lot in this channel, and we believe that's the next phase of growth that will come for us. So across channels, A, B, C, D, we see that the growth will come for us, and which will take us from this 15,000 to 30,000 crores. For the current year, we are again planning a similar growth rate of 18 to 20%, focusing on group, digital as well as agency business. So it will come across the channels over the years for us.
So if we take your past performance as a precedent, by FY28, you can probably make, 30,000 crore in gross written premium. The underlying profits then could be 500 crore, more than 500 crore. Is that a fair estimate?
Yeah, absolutely, yes. On a GWP of 30,000 crores, we're talking about a combined ratio of, say, 96% also. It's a 4% margin, which is around 1,200 crores. After reinsurance, after the earned premium logic, it will be higher than our 500 crore number. That's absolutely fair.
Okay, all right. And do you stick to your guidance of bringing down your combined ratio by 200 basis points by FY28 and 50 basis points each year?
Yeah, when it comes to combined ratio, what we have said is for the current year, we'll be able to improve it by 100 basis points. Having said that, on an ongoing basis, we want to maintain a range of around 95-96%. An improvement in combined ratio means that we are increasing prices from the customers and reducing the loss ratio, which we don't want to do. We want to keep the prices stable. We want to make money by bringing in operating leverage and improving the expense ratio. So as long as we are able to meet our ROA profits, we want to operate in a particular combined ratio range, which should be beneficial to the customer. That's the long-term objective of the business.
All right. What about, health insurance? You currently are the second largest by book. When do you see yourself becoming the largest?
See, while the objective is to grow the business, it will be a function of what the market grows in, but the kind of profitability profitability pressures which each companies have, many of the companies will get listed. We believe that we should be the largest health insurance player in the industry because we have the highest retail portfolio. It's very easy to increase in the group business, but we want to do that business also profitability. So the kind of growth numbers that we're talking about, the kind of pressure which players in the industry will have, we believe we should be the largest health insurance players in the next 3 to 4 years.
Okay. All right. Now, coming to the price correction of about 10 to 15% in 1/3 of total policies, how much do these policies form as a total of your premium? And how much do you think could be the precise increase with regards to adding to the premium?
So what we have maintained is price increase is an continuous phenomenon when it comes to health insurance. Whenever a product starts hitting a certain loss ratio threshold, we go in for a price increase. So as we speak, we have taken a price increase for 2 of our products in the range of 10 to 15%. As we speak, we are evaluating products where the loss ratios have started taking, reaching a certain threshold level, and we'll be taking price increase in the next 2 to 3 months, kind of a thing. When it comes to financial year FY25, we believe around 2% of the overall growth will come from the price increase that we have taken. Because this is a smaller price increase compared to a large price increase that we had taken for our flagship product last year. These are pretty, normal price increase in the range of 10 to 15%, which will not have a very big impact when it comes to growth of overall business.
All right, always a pleasure speaking with you. Thank you so much for joining in. The Street likes what you've said, 18 to 20% sort of growth over the next few years, looking at a 30,000 crore gross written premium, which would imply profitability over 500 crores as well. Stock's been doing well, holding up with gains of about 3% as well. But over the last few days, if you see, there has been a bit of a marked uptick in the share price of Star Health itself. Take a short break, come back.